You know that feeling when you spend money on something because it sounds like the responsible thing to do, and then 6 months later you realize you just made yourself poorer on purpose. That is what happened to a 32-year-old freelance photographer in Charlotte, making about $38,000 a year. They read a blog post. The blog post said, "Get an LLC. Every serious business needs an LLC. Protect your assets. Separate your personal from your business." They Googled it. They paid a legal service $800 to set it up. Filing fee to the state of North Carolina, $125. Registered agent, another $125 a year. Then came the part nobody warned them about. The annual report. North Carolina charges $200 for that. Every single year, due April 15th, like clockwork. Then there is the separate bank account, which, okay, no monthly fee if you find the right one. But the time it takes to manage two accounts, reconcile two statements, keep the records clean enough that the LLC actually means something legally. And then tax season, a CPA filing a basic Schedule C for a sole proprietor charges somewhere between $300 and $750. According to BPA Tax's 2025 survey. But an LLC, even a single member one, even one that files the exact same Schedule C, somehow costs more because the CPA has to verify the entity is in compliance. Check the registered agent status, make sure the annual report was filed. We are talking $450 to $850, easy. So this photographer in Charlotte, $38,000 a year, just committed to spending somewhere between $525 and $825 a year, every year, to maintain a business structure that does not change their tax rate by a single cent. I want to say that again because I did not believe it the first time I worked through it. A single-member LLC that has not elected S-Corp status is what the IRS calls a disregarded entity. That means the IRS does not see it at all. You file the exact same Schedule C you would file as a sole proprietor. Same line items, same deductions, same self-employment tax. The LLC changes nothing on your federal return, zero. And in North Carolina, the state income tax is a flat 3.99% for 2026 either way. So what did the $800 buy? This is the part where I need to tell you that I am not a financial advisor or a lawyer. I am just someone who sat down and ran the numbers. Because I was asking the same question for myself, and what the public data shows is worth looking at. Because the gap between what people think an LLC does and what it actually does at this income level is wider than I expected. The answer most people give is liability protection. That is the pitch. Your business is separate from you. If someone sues your business, they cannot come after your house, your car, your personal savings. That sounds incredible, right? That sounds like the kind of thing you should absolutely pay for. But here is where it gets complicated. And honestly, this part I did not fully understand until I started reading the actual case law instead of blog posts. There is a legal concept called piercing the veil. It means a court looks at your LLC and decides, nah, this is not really a separate entity. This is just you with extra paperwork. And for single-member LLCs, in-service businesses, with no physical assets, no inventory, no employees, which is exactly what a freelance photographer is, courts pierce that veil more often than you would think. According to legal analysis published by Wolters Kluwer, the factors they look at include whether you commingled funds, whether you kept separate books, whether you adequately capitalized the LLC, whether you maintained formalities. A freelance photographer with $38,000 in revenue, one bank account they sometimes accidentally Venmo from, and no operating agreement sitting in a drawer. That veil is not a wall, it is a suggestion. Nobody talks about this at dinner. And yet, according to Census Bureau non-employer statistics, roughly 78% of non-employer firms, which includes most solo freelancers and service providers, earn less than $50,000 per year. The Census Bureau reported 491,941 new business applications in March of 2026 alone. A huge portion of those are going to become single-member LLCs, and a huge portion of those LLCs are going to cost more to maintain than the protection they actually provide. I mean, look, I am not saying LLCs are a scam. They are not. They are a real legal structure with real benefits in real situations. But the question is whether your situation is one of those situations, and for a lot of people, the honest answer is no. Let me walk you through the math the way I wish someone had walked me through it. You are the photographer in Charlotte. $38,000 in gross revenue. You have about $6,000 in deductible business expenses. Gear depreciation, mileage, editing software, cloud storage. That puts your net self-employment income at $32,000. Self-employment tax. The IRS takes 15.3% of 92.35% of your net earnings. That comes to about $4,521. Now, half of that self-employment tax, about $2,260, is deductible from your gross income. So your adjusted gross income is roughly $29,740. Subtract the federal standard deduction of $16,100 for a single filer in 2026, and your federal taxable income is about $13,640. The first $12,400 is taxed at 10%, the rest at 12%. Federal income tax roughly $1,390. Then North Carolina. Your state uses its own standard deduction, $12,750 for a single filer. That gives you a state taxable income of about $16,990. At 3.99%, you are looking at about $678. Add it all up. Self-employment tax, $4,521. Federal, about $1,390. State, about $678. You started with $32,000 net. You are keeping somewhere around $25,400. Now subtract the LLC maintenance annual report $200. Registered agent $125. The CPA upcharge over what a sole proprietor would pay. Call that an extra $150 to $200. Maybe you also pay $20 a month for that separate business checking account. At one of the bigger banks, that is another $240 a year. Total annual LLC cost, somewhere between $715 and $765. You close the app, you open it again 10 minutes later. On $25,400 of take-home, that is roughly 3% of your actual earnings going to maintain a legal structure. That, for your specific type of business, may not survive a court challenge anyway. And here is where it gets weird. If you had just operated as a sole proprietor from day one, your tax situation would be identical, literally identical. Same Schedule C, same self-employment tax, same deductions, same brackets. The IRS does not care whether you have LLC next to your name. They care about your Schedule C. The difference, you would have saved $800 in formation costs and somewhere around $740 a year in ongoing costs. Over 5 years, that is about $4,500. That is not a rounding error. That is a used lens. That is a quarter of a trip to a destination shoot. That is real money that left this person's pocket and bought them a piece of paper that the legal system may or may not respect. Now, let me be very clear about when an LLC does make sense, because this is not a one-size answer, and I would be lying if I told you it was. Okay, so here is where the picture changes. If you have assets to protect a house savings above a certain threshold, a spouse's income you want to insulate, the calculus shifts. If your business involves physical risk, you are a contractor, you work on people's property, you sell a physical product, the calculus shifts hard. If you are making above $75,000 net, and your CPA is talking to you about an S-Corp election, which is a specific tax election you can make within an LLC, then the self-employment tax savings alone can more than cover the LLC costs. Harbor Compliance notes that S-Corp election generally becomes the stronger choice for LLCs producing between $75,000 and $250,000 in owner profits. If you have partners or investors, an LLC is not optional. It is the table stakes. But a solo service provider, $38,000 a year. No employees, no physical storefront, no inventory. Working from a laptop in Charlotte. They did not complain, they adjusted. That is what most people do, and that is exactly why nothing changes. The system that told this person to get an LLC is not broken. It is working exactly as designed. Legal services get paid, registered agent companies get recurring revenue. CPAs get a slightly higher fee. The state of North Carolina gets $200 a year. Nobody in that chain loses money when you form an LLC you do not need. That is not a conspiracy. It is a billing arrangement where every participant benefits, except the one writing the checks. Now, I am not telling you to do any of this, but here are the levers that exist. Lever 1. If your annual net profit from self-employment is under $50,000, and your business is pure services with no physical liability exposure, a sole proprietorship with a solid general liability insurance policy, which for photographers typically runs between $200 and $500 a year, according to Insurian and MoneyGeek 2026 data, may give you more practical protection than an LLC. Insurance actually pays out. An LLC veil has to survive a court challenge. Lever 2. If you already have an LLC and you are below that threshold, look at what your state charges for the annual report and whether you actually need a paid registered agent. In some states, you can be your own registered agent for free. That alone saves $100 to $300 a year. Lever 3. If you are growing, if you see yourself crossing $75,000 net within the next 18 to 24 months, keep the LLC. Do not dissolve it, because at that point, the S-Corp election conversation becomes real, and the self-employment tax savings from that election can reach thousands of dollars a year, depending on how you structure your salary versus distributions. Having the LLC already in place saves you the reformation costs. Lever 4. Regardless of your structure, open that separate bank account, not for the LLC for you. Clean books are clean books whether you are a sole proprietor or an LLC. The separation protects you either way, and it makes your CPA's life easier, which means your CPA bill goes down. 5.7 million new business applications were filed in the United States in 2025, according to Census Bureau data. A lot of those were people like the photographer in Charlotte, people who wanted to do the right thing, people who Googled it, people who read a blog that said protect yourself, and then spent money they could not really afford on protection that may not actually protect them. That is not a personal failure. That is an information gap with an $800 entry fee and a $700 annual subscription. The photographer in Charlotte is still shooting, still booking, still figuring it out. The LLC paperwork is in a folder on their desktop. The annual report is due in April, $200. They are not wrong for wanting to do this right. They just did not have the numbers before they signed. Now they do.